What is going on, y'all? It's your boy Nicholas, and welcome back to Nick's Dynasty. Back with another finance video. Haven't done these in a while. I actually started selling covered calls in January, so I'm going to tell you my experience with this investment strategy, this active investment strategy, selling options that some may say is risky. I'm going to let you know that I'm not making this video for you to start to sell covered calls. I'm just sharing my journey. This is a very small percentage of my net worth. I would say less than 1% of the money we're playing with. Most of my money is in slow index funds, the S&P 500, the classic way that financial advisors will tell you to build wealth. This is just something I'm doing on the side, wanting to see how much money I can generate with this strategy of selling covered calls. So this is a very small percentage. I learned how to do this by watching the Average Joe Investor account. I'm going to link his channel in the description below. But essentially, I'm selling options on stocks that I already own. I'm not going out in the market and buying it at a certain percentage that fluctuates. Basically, I already own the shares and I'm selling options to sell these specific shares. I already own them, so it's a little bit safer, they say. So ideally, if my cost basis is at $13 per share and I sell a call option at $13.50, if that transaction goes through, I'm not losing any money because I am above my cost basis. But if my cost basis is 13 and I sell an option at $12.50, then I'm losing 50 cents per share, or I am losing $50 total because I am doing, these are a contract of 100 shares. So that's the general basis. You can learn more about how to sell covered calls, what are covered calls, if you just do some Google search, do your own research, or find some channels that may talk about it, such as Average Joe Investor. So without further ado, we're going to get into the results of how my journey with covered calls has gone. Was it worth it? All right, so let me try to explain this journey. So we're working with $1,553.94. This is the money I'm setting aside to do some doing some covered calls, doing some dividend investing, trying to grow some money with dividends and call options. So the stock that we're doing, you have to have 100 shares of it. So the numbers that we're going to base our percentage returns of is $4,500, $1,450. That is the money that I had put into this dividend stock that we're going to be selling those covered calls on. I have a couple of other investments that I'm going to be having cash in. We could sell those to add more money to this option investment if the stock goes super up and we need more cash to be able to buy 100 shares. But we're going to focus on that initial $1,450 for our journey. So going off of that number, we have generated 30.19% cash return. So that is really pretty interesting. Very good, I would say. If you're just looking at high yield savings account during this time, I was around 5%, 4.5% now. So 30% is killer. With our dividends, we brought in basically 3.39% of that initial cash. And then together with the options and with the dividends, we brought in 33.59% cash on cash return. That dividends would have been a little bit higher, but we'll go through the journey and see that I kind of made a little bit of a mistake as far as the ex-dividend date and the assignment date for those options. So that is going to be something to be mindful if you start to do this, or our numbers will look a bit different if we just execute it and have all 100 shares ready to get those dividends in. So if we look at my computer, we can see that I brought in $434.87 from January to September with our call options. And it looks like our highest month was August. We brought in $132.91. And our lowest month, which is also our lowest dividend month, was June, where I kind of made a mistake. We only made $8.44 for the option premium, and we only made $4.53 in dividends, and it should have been like 20 something. Our other investments, those are mostly dividends. We also made $36.53, and those other two investments that we worked on. So if we want to look at like what this means, we'll scroll over and look at kind of like what happened. We're going to look at this highlighted section. So our first call was for $10, and basically there's advisory fees, so we did only bring in $9.95. And then I bought back that option early to sell another call right away. So we did subtract $2.03, but right then and there, I sold another option and brought in another $11.97. So for our first month in January, we did 3 covered calls. So that's going to be, brought in $9.95, we brought in $11.97, and then we brought in $22.94. The next month, we did 4 options. We bought back 1 option. So it looks like I'm missing one, but we did sell one for $17.94. And then we bought it back for $10.03. I don't know what I was doing there. I'm not sure if that was a dividend. No, dividends came in we got it paid in March. The ex-dividend date might have been in February. So that might have been something that I did. And then we sold one I did some small things just for $1.97, also $2.97, and then we got it back up to $11.94. The platform I'm using is Robinhood. I'll link that in the description below. So what I'm doing, I'm being a little bit conservative. So you could get more option premium if you're kind of like at where the stock price is. In the beginning, I was right where the stock price is, but then it starts to fluctuate, whether it goes down, whether it's up. But I'm making sure I'm selling those call options above my cost basis so I don't lose any cash, don't lose any shares. So I'm doing this very conservatively in the beginning. I could have, if I was more aggressive, I would just go right around where the stock is, whether it's under the stock, and hope that I don't get assigned for a loss. What you can do is you can roll these options. Like if you're going to get assigned, you can extend it another week or whatever. That might put money in your pocket, and that might take money away from you. It looks like the first time I rolled something, I extended it to another time is when we made this $22.94. That's a roll, so I extended it, and then the next time I rolled it too. So it looks like there was like a change in the stock where it kind of went below my cost basis. So I just kept on rolling it to make sure I wasn't assigned at a lower thing. So if we look down at May, things get a little bit interesting. We only brought in $37.76, but I started to do a little bit of, that's when we had our first assignment. So that's our first assignment in May, and then I learned what a cash secured put is. Basically, it's the opposite of the cover call. We have the cash, and we are committing to buy 100 shares of this stock, and we're going to get an option premium. So basically now I'm starting to do the wheel strategy. If I get a sign, I'm going to sell a cash secured put and make some money off of that. Then I'm going to sell covered calls, make those premiums until we get a sign. And once we have the cash back, we'll sell a cash secured put to make premium and to buy those stock again. So now I'm doing a wheel strategy starting in May. So essentially that's going to help us, make more money because we're not limited to just going out and buying the stock at a higher price. And now we're buying a cash secure put. Even if it's a higher price, we are making money. We're making premium options off of that. So if you look at August is our highest month. We made $132, and of course I'm still being a little bit more conservative here. In August we did have an assignment there as well, but in August I was able to sell something for $28. For $90 I was able to sell an option $43. So we are getting closer to being on the money. The price has gone up because in August we actually did have an assignment for a $15.15 stock, and that is $1 higher than what we did in the beginning. So the stock is rising at this time. Our total earnings from what we're doing, the dividends from this stock and the premium, is $487.07. That's some good income right there. Some of the months are kind of low, like $8.44, and some of them are kind of high at $132.91. This could have definitely been higher if I was more aggressive with the strike price, but I am happy with the results, and we'll talk more on what this could have looked like. So we'll look at my computer and we'll see what would happen if I just held the stock and not sold those options. Most investors, advisors say to just buy and hold, but we're being very active. So if I had just held the stock, I'll reveal what the stock is. I'm not telling you to buy this, but this is what I was working on. It's basically more affordable. So I was recording this in October, but I only did the calls until September for this video. So the stock price ended in September around $16.24, definitely higher than $14.50, but that income would be this right here, which is lower than what I did in option premium. Now in October, we'll see how the stock looks now. Look at KeyCorp. KeyCorp is what I've been selling these options on because it was more affordable. As you can see here, it was $14.61 in the beginning of the year, and now it's at $18.97. We'll talk about my position on what that would have been. So I was basically at it at $14.50, and if I had held it to, I was looking at it just a few minutes ago before I started this video, I believe the stock price was at like $19.10. It did go down a little bit. Yeah, $19.10 last thing I looked at. But basically, I would have made $451 if I sold it. That would have been the capital appreciation. So that is less than the premium that we made, the $475. And mind you, one of those months we only made like $9. So I am slightly ahead. And we can see that I could have done a little bit better if I had paid attention more, knew what I knew now. I could have sold more options at a higher premium, making this definitely elevated. So I am going to continue to do this and see if we can get any month that's more than $132.91. So we definitely can do that because I have something I'll tell you about at the end of this video. But there's one also thing. I did lose about $50.18 of capital due to assignments under my cost basis, and that was due to negligence. In a couple of months I kind of got confused during around the dividend time and the assignment and trying to get those shares back to get those dividends. So I have definitely lost a little bit of money Luckily, it's only 50 bucks. And if I was paying attention more, we probably could have got assigned at a higher cost basis. Let's say always 50. So from those assignments, I think I had 7 assignments as far, or let's say 3 assignments for, so I had about 4 assignments as far as the covered calls where we actually sold those shares. Let's say I would have made 50 bucks for each of those. That would have been like 200 bucks added on to this. That was capital appreciation, but we weren't really paying attention at that time. So this has been my journey of selling covered calls, and I'm pretty bullish on going forward. I know where to put those strike prices, monitoring the dividend dates, and make sure if we are going to get assigned that we're going to be above our cost basis, or if we're going to be below our cost basis, roll that out to a place where could potentially we be above or at our cost basis. Also monitoring that ex-dividend date to see where we're going to need to not have an assignment. Also buying back our option for a certain price. I like to buy it back when I'm like 80%. Let's say I sold it for 2. I sold it for 10. I can buy it back for 2, buy it back for 1, buy it back for 3. Then I can sell another covered call or cash secured put and get the higher frequency. So going forward, I have changed the underlying investment, so I think I'll bring in a lot more money. I'll make a video at the end of the year to show you what November and December look like. But the stock I'm doing now, instead of selling an option every week, I can sell one every 3 days, so it should be higher frequency. And I'm gonna be a little bit more aggressive at the money. So like getting as much appreciation options that I can outside of getting assigned below the cost basis, or if it's below the cost basis, roll that out. So I'm probably bullish on that. I've been happy with my covered call journey. Made a 33% cash return. We did have a little bit of cash go away because of that assignment that I wasn't paying attention at, but I've learned how to do this. You can learn how to do this too if you want to. If you don't have money to invest, I hope you just use this as entertainment. But if you do have some extra money and you want to do something different, learn how to do this potentially and decide whether it's worth it or not for you. This only takes me a few minutes each week to do this, to find where I want to sell it at, and I've enjoyed it. The platform I'm using is Robinhood. I'll link that in the description below. Other than that, it's your boy Nicholas. Don't forget to like, comment, subscribe. Peace out, y'all.